Welcome. Nice to see you.
Sarah, great to be here with you.
You must be feeling pretty good, 8% revenue growth, and the stock is reacting nicely. Where is the growth coming from, and why did it come as such a surprise?
Look, I think it's a great testament to the strategy we laid out. We talked about hybrid cloud and AI will drive demand, and we saw that drive demand both in consulting and in software. And that is where really the growth is coming from. It's coming from all geographies and in all parts of software and consulting. That makes us feel really pleased with the start to the year, and I think puts us on a great trajectory towards mid-single-digit growth for the year, probably on the high end of mid-single-digit.
Right, which you told the street, and that was also good news, though the margins were disappointing. So what is the story there?
I wouldn't call them disappointing. Look, we are investing ahead in consulting. We saw this growth coming early in 2021, so we started getting ahead of the curve in terms of bringing capacity on. That allows us to fulfill the demand that we see in consulting. But with underlying wage inflation, there is going to be a lag of 6-9 months, something like that, but not a whole lot more. But when there is demand in the market, I'd much rather be on the side of getting that demand, getting that market share, and then over the next 6 to 9 months fixing the margins. And the margins in software were very good, so I don't see an issue with the software margins.
When it comes to fixing the margins, so are you going to be able to pass on higher prices? And when does that happen, and why hasn't it happened yet?
So typically contracts in consulting are anywhere from 12 to 18 to 24 months. They're not really 5 years or so, but they are typically a year ahead. It's very hard to go back to somebody and say, look, I know I signed that 6 months ago, but I want to raise there. That's not going to happen. But everything that we sign now on will have some of those newer inflationary pressures built into them. Now, as that becomes the revenue, then you begin to see in 6 months, you replace some of it. In 12 months, you replace a lot more, and you begin to get that in there. So yes, so we are putting in that there should be inflationary pricing. It is expertise and based, and so that is going to get passed on. Two, also as supply chain prices go up, while hardware is not a huge part of our business, there are inflationary pressures in the supply chain as well. So those two are where we are going to be able to pass some of that along to our clients, and they should expect that.
You feel good about that. The other question that people are raising today is there was a positive contribution from Kyndryl, the company which you spun off, and it was 5 points of revenue, so it was pretty significant. And some are wondering if that shows sort of lesser quality of the underlying business and how much longer that is going to sort of distort results.
Yeah. So we've been very, very clear. The Kyndryl contribution will carry on until this October and then come to a dead stop because it is sort of we can call it inorganic bolt-on. At that point, it'll go away. We said we expect about 3.5 points for the whole year. Q1 was a bit more than average, and we kind of expected that because of how the revenue profile plays out through the year. So we expect 3.5 points for the year, and then it goes away. What we have committed is mid-single digit, on the high end of mid-single digit, without Kyndryl. So if you look at the constant currency growth, we were close to 11%. You take out Kyndryl, we were still north of 5%. And so that is right on the model, and that's what we should expect going forward.
So software is obviously the baby. That's the sexy part of the story, AI, cloud. How big of a business do you want to make that? It's what, about 40% of overall revenues right now in this new structure?
Software is about a little over 40% of the revenue. I expect that as time goes on, we're going to get it closer to 50%. I think consulting is at 30, and it should remain about 30, and then 20% is going to be there in infrastructure. But as time goes on, we'll see that software will rise a bit more, and infrastructure will be a bit less, because we are saying software should be a mid-single-digit grower now. You can expect maybe more at some other time, but right now, mid-single-digit, infrastructure is flat. So when one is 40, one is 20, one is growing at 5%, and one is at 0, that's just math.